Hey folks and folkesses, Simon here. Sorry about my bouffon. Need a haircut. Check out my blinds. So, we had a weird story. Basically, we had a company come and quote us for a bunch of blinds. And they got back to us with a quote of like something ridiculous, like $6,000 for blinds and curtains, etc. And I was like, screw that. And so I just bought £20 blinds from Amazon just to see if I could do it, because I am the world's worst DIY person. And check these out. I think I've done all right. So yeah, that'll stop the glare. Obviously, they've used like the most see-through material they could find. But yeah. Anywho, today we are going to go through the very contentious topic of renting versus buying. And this is all due to lovely comment from Stephen, a comment on Facebook by Stephen Howell. Hey mate, saying, my wife doesn't understand why you rent instead of have a mortgage or own a house yet. Have you done a video on that yet? Also, did you order a Rivian truck? Blah 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 blah. No, because Rivian sucks. Right, let's get on into it then. Righty tighty, let's get this camera more straight. I don't know if this is working. Right. Okay, so first of all, this was actually, I was going to talk about this on the Wealth Action Plan, or WAP Ask Me Anything session the other day, and we covered quite a lot about, biz metrics and stuff. So hopefully that made sense to you guys. So yeah, now we need to get onto this. So renting versus buying. Now, I have made a video about this a long time ago. It was like 2 hours long. So I'm going to simply blast through this as fast as I can. And obviously you have to understand that this is coming from my perspective, okay? There is no right or wrong in this. The key thing I want everyone to know is that when it comes to the renting buying debacle debate, it's all about circumstances. So what are your circumstances? What is your cash flow like? What are your goals? And then you have to make informed decisions based on your situation. And hopefully you can, that's what you'll see from today. So as I said, there is no correct or no single correct answer. It would be helpful if I could read. So what I thought I'd do to begin with is go through a little pros and cons type thing with renting versus buying. I'm just going to shut my WhatsApp. There we go. So before we get into that, as you can see here, I've put buying in little bunny ears because of this. You don't own anything until you're mortgage free. You're simply renting from the bank until then. And this is a really key thing you need to understand. I see so many people on Facebook showing their keys in front of their new house. I'm like, no, you haven't bought shit. You're renting it from the bank for the next 30 odd years or whatever. And if you ever do an equity release or remortgage, whatever, they've got you by the balls for the next, or for your life. Remember, the word mortgage comes from France. From the French, mort is death and gauge is measurement. So literally a mortgage is your death measurement, because typically you die by the time you've paid off your your mortgage. Anywho, that aside, so and remember, the way I look at everything these days, or well, pretty much for a long time, is anything you have to approach every topic with complete neutralism. Neutralism? Just be neutral. I always imagine I'm an alien visiting Earth for the very first time and seeing things as they are, not with any pre-existing biases. So let's go through one by one. Flexibility. So with renting, yes, you have flexibility. I've lived all over so when I left the Air Force, I wasn't really sure where I wanted to live, because I moved all over the place with the Air Force. I didn't want to go back to Norwich because I was born and bred there, and I was like, I know Norwich. I need to sort of expand my horizons because I'm not a tree. I can literally get up and go and whatever. And that was good because renting, in fact, I want to keep this short, so I'm going to go through this. So renting, yes, for flexibility. Buying, nope. Egregious opportunity cost, not for renting, yes, for buying. I'll talk about opportunity cost in a bit. I can't quite get the angle of this, but hopefully that'll suffice. High fees. There is not really that many high fees with renting. For buying, yes, I would say like stupidly high fees. Potential appreciation growth. You got nada with. There's no PAG, as I call it, potential appreciation growth with renting, but you do with buying. Remember, the key word here is potential. It's not guaranteed. And you'll see why prices don't double every 10 years. Source of cheap borrowing, no, for renting, there's nothing there. However, buying has really good cheap borrowing. So yeah, I guess if you do want to remortgage or whatever, you can borrow money for bugger all, which is really handy. Home improvements, no for renting. Yes, if you own your house, you can do whatever you want to it. Whereas renting, you have to ask permission. Stability, no. Renting, no. No stability, or very little stability compared to buying, because you're always at the whim of your landlord. If you piss them off or whatever, it's ugly. And I've had my fair. Well, I haven't had that many landlords, but I've had one absolute freaking nightmare of a landlord. And more house for your money. Okay, so this is a biggie. You can get lots of house for your buck, whereas with buying, nah, not at all. So obviously it depends what you want. As I said, depends your circumstances and what you want. So some people may want stability, the ability to do home improvements, cheap borrowing, potential your PAG, and all that sort of stuff. And therefore, yeah, screw it. If that is your goal and that's what you want to do, go and mortgage a house, rent a house, buy. I'll just say buy and just keep clear here. So yeah, go and buy a house, fine. But I have different goals. So you have to understand. In fact, I'll move sideways before I continue with this. I just want you to have perspective, and I talk about this a lot with. I just want you to have perspective. Now, I talk about this a lot with some of my students, but if I just type in CAGR, 1 second. If you go to Google and type in CAGR calculator and pick any of these, doesn't really matter. So what happened was, like 10 years ago when I was broke, I had bugger all to my name. I had like £5 to my name. I wanted to get to something stupid, like I wanted 1, 2, 3, 4, 5, 6, like £5 million net worth, and I wanted to do it in like 10 years. And so I figured, okay, if I want to go from bugger all to 5 million net worth in 10 years, what's the average ROI, return on investment, that I need to get every single year? So I came across, did some research, came across a CAGR calculator, a compound annual growth rate calculator. And then looking at this, I was like, shit. Okay, so if I want to go from £5 to 5 million in 10 years, I need to average a CAGR of 99, call it 100% a year. Didn't seem feasible. So I tried to be a bit more realistic, and I was like, maybe 15 years, 58%. And then I played around with this. But long story short, the number that I sort of, I had to first of all rejig my expectations and my numbers and time frame. And the number that I think I settled on was 50%. As in I wasn't willing to budge on where I wanted to get to within the time frame. Then I realised I had to achieve a 50% CAGR every freaking year, and it was a 10-year time frame. What I was doing it for. I think it was actually 2012. I did this, and I was like, yeah, 50%. And I then scoured the whole globe or in my pants looking at Google, and I didn't go travelling, but I just scoured the globe for every asset there is. And I got in fact, I'm going to pause the video, or in fact, I'm just wearing underwear, so I'm just going to sort of scuttle sideways. Okay, here we are. So I made this in like 2018, so I came across, I basically made this little booklet August 2018 of the 21 main asset types, and basically my little 2 pence on all of these different asset types. And long story short, I figured that when you look at all the asset classes out there, there's bugger all that makes that has the potential to make 50% per year. Especially property. You can't make 50% ROI per year, year on year, with property. Unless you set up a property business where you're selling courses or whatever. And so straight away, I ruled out property a long time ago because it wasn't going to be a wealth generation tool for me. And that's why I settled on business. Business is literally the only tool out there where you can realistically do 50% ROI or more year on, year out, especially in the startup phase. So if you get the hang of doing startups, so many times I've put, 10, 20, 50 grand in a new startup, and before, not long later, it's chucking out 20 grand a month, 50 grand a month profit. And so the ROI from that year on, year out, it does peter out. So it'll be, you can get 100% a year growth, and then it goes down. And what I've found personally with my particular skill set, I'm nothing fancy. I'm just an average bloke I just study things differently and do things a bit differently. When you get to sort of like £1 million turnover type business, then your ROI per year does drop a lot. It drops down to like 20% odd. But from 0 to 1 million rev, you can get all sorts of bits and bobs. That's why I've got like 9 different companies that I run, because they're all in different phases, etc. So that's just in a nutshell. That's why I just ruled out business straight away. Property straight away, because if single lets, service accommodation, HMOs, all that, it's not going to make you 50% per year. So let's move on. So for me, I wasn't all about settling down. I just really kicked myself up the arse. I was all about wealth generation, as in I was trying to get in my wealth generation journey. So I didn't want stability. I didn't want home improvements it's also cheap borrowing, but all of the house buying stuff didn't really apply to me. I was all about getting, wealthy quickly, if that made sense. And buying a house is the worst thing you can do if you're on an aggressive wealth accumulation phase of your life, because you are literally parking money in deposit, in fees. I looked at buying a house. I did actually look at buying a house a couple of years ago, and I worked out it was like 60 grand in fees. I was like, ugh, and that's ignoring the deposit. I was like, nah, I could set up, grow a couple of businesses with that money. So, okay, so let's move on. Why mortgages are a massive con, in my opinion, okay? I'm going to have to keep on talking about this, in my opinion. So, for example, if you take a house or a mortgage and you have it on a standard variable rate mortgage, a tracker mortgage, for every 1% that UK base rates go up, you're going to be forking out ballpark £120 per month extra, okay? Extra. And I'm using rough rates, okay? And so let's say, and I was like, okay, well, what is the 300-year UK base rate average? And the 300-year average in the UK is 7%. And I was like, oh, Jesus, look, that's going to be pretty painful if base rates get to 7%. Now, at the moment, we're in a world where that's not going to happen for a while. We're going to enter a world of negative rates. I'm pretty damn confident we're going to see negative rates in the UK and the US in pretty, no time at all. But anyway, going back to why I think this is a con. I thought, well, let's say, rates go up 3%, as in base rates, and you're on a standard, and you're on an SVR mortgage, your mortgage is going to go up roughly £360 per month on top of, the original mortgage. So, most of the population can't afford an extra £60 a month, let alone another £360 a month. And also, when you look at the way, if I can move a whole bunch of things around, if I move this over here, mortgage lenders are not stupid, okay? They have actuaries, they have statisticians, I can never say that word, stats people doing their stat stuff. And what they find is that on a mortgage, etc., you or what tip? Again, I'm being very bland here, or broad brush. Sorry, is that it looks like this, and really you don't start paying off much of your principal until sort of about year 9-ish. But what is the average house time? Sorry, let me rephrase that. The average time in the UK that a person stays in a house is about 7 years. So statistically, every 7 years you move house. And that makes sense, because if you ever study the demographic spending wave, and you know how families work and how they move and the way that they spend at what points of their family life, then this makes complete sense that, you know, you move house every 7 years or so because your family is growing, you need more rooms, yada yada yada. And so banks love this, because the moment you take out another mortgage, you're starting all over again. And why do banks absolutely love mortgages? Well, sorry, I was going to say, if you going back to this SVR, a 200 grand SVR. So let's say this was a £200,000 mortgage. A bank, over, let's say, a 30-year period, 30 years, have a little think of how much they will make from that. Well, over 30 years, ballpark, they're going to make, probably 180 grand out of you, and that's in fees. So fees plus interest. Obviously, it depends the time frame of your mortgage and the rates, etc. But I'm just ballpark. I mean, there is a rule of thumb that if you buy a 300 grand house, the bank will make 300 grand in fees out of you, and that's just a big rule of thumb. And so, if you are a bank and you basically make ballpark the same amount of value of whatever house you give a mortgage for, well, surely you're just going to be like, all right, mortgages. And that's what the whole, the property world is. House prices go up in accordance with issuance, mortgage issuance, not supply and demand, which is what a lot of people think. It's based on how many mortgages are being issued. So I've made an article on that somewhere else. So yeah, it is a bit of a con, because you're then a slave to your lender, and if you stop paying, you in default, you could do really well for like 10, 20 years or whatever, and you have a bad hiccup and you stop paying your mortgage, and guess what? You lose your house. And also, you never really own your house. Try not paying your council tax for 6 months and see what happens. So yeah, yeah. Also, talking about in fact, I don't know if I've written this here. I'm just going to write, just so I remember, opportunity cost, because I want to talk about that. That's really, really important. So the house appreciation fallacy. So everyone seems to think that your house will sort of double in price every 10 years. And those that say that have either done no research, or they're just being myopic. And when you're looking at investing, you must not have a 5-year outlook or a 10-year outlook. You're like, well, what's happened over the last 10 years? You need a minimum of a 50-year outlook. But I mean, I tend to look at things on sort of 100-year plus outlook, because that's where you can see massive trends. And so when you look at house prices over time, it tells a different story. So look at it. This is UK house prices compared to earnings since 1845. Now, this is an old chart. It goes back down to, just past 2013, 2014-ish. So you can see that house prices have actually been falling for a long time, and in terms of compared to house to earnings, and it's way down here now. House prices, so it's got worse, as in house prices have gone way higher compared to your earnings. Okay, so they're just more unaffordable these days. It's in somewhat of a bubble, and that's only since I guess the 1970s, when Thatcher and Reagan started the every man must own his own home, and then they took your house payments, mortgage or rent, out of the CPI basket, as in how they measure inflation. But again, I've made videos on that as well. This is already like a 20-odd minute video. And if you look at this, house prices, so yeah, from the 70s, that's where it really took off. But from 1845 to like 1960, house prices did nothing. frig all. And this is just due to financial engineering and the world of derivatives that have just pushed prices up. So they don't always double every 10 years. But I mean, I guess this is a chart that sort of contradicts what I'm trying to say here. But I mean, these are the stats, okay? Personally, it's just a bit of a bubble. Okay, here we go. So here's opportunity cost. Okay, so let's go through this. I remember this now. Real opportunity cost example. So I used to be an Air Force pilot, and I won't mention which squadron I made. I want to keep this person anonymous. But basically, there's me, with my little cheesy grin, and there's my mate. Well, I say my mate. Oh, here's a mate. But back then, he was like my boss. Okay. And he was an older guy. So this was, I say older guy. I think he's like 10 years older than me. So what am I? I'm 34. So he's probably 44 now. Okay. He was one of my flying instructors and a boss-ish. So we had a bet. So back then, when I left the Air Force, we had this house buying, renting sort of debate, and we had a little bet. I think it was like a 50 quid bet, which he owes me, by the way. So you know who you are. If you're watching this, you owe me 50 quid, mate. So we had, I think it was 24 grand off the top. I think it was 24 grand. So at the time, I could rustle up 24 grand. And he also, surprisingly, had 24 grand that he and his wife had saved up for a deposit. And I said, putting your money in a house deposit, etc., is just really bad if you're in this for wealth generation. And he was like, no, the house is going to be worth a fortune, blah, blah, blah. Fast forward. So if we then fast forward to today, he then put his house, his money in a house, etc. He's still paying it off. He's still paying the mortgage. And at the same time, he stayed in his job, and he's still in the Air Force, actually. So I don't know what he's earning. He's probably on 45 grand a year, something like that. And he's still paying. So he's still flying. He's having fun, etc. But he's still got a bit of a mortgage. I don't know how much is left. No idea. And I don't actually know how much money the house was for. I mean, if he put 24 grand in, I don't know. Let's say it was a 250 grand house. Don't know. So meanwhile, I quickly left the Air Force, actually, and I blew a lot of that. So I actually made really bad trades, and at one point, I screwed myself over big time. So I lost all of my money trading. So I got down to 5 grand, and then I had to pay my rent and bills, etc. Trading a 5 grand account. I was trying to make 2 grand a month from a 5 grand account, and in hindsight, I was like, I was trying to make 40% ROI per month, which is just ridiculous. And then, long story short, I turned that 5 grand successfully down to 2.5 grand, which is just it was not a good time. And this was at my low. I think my low was like, I think it was probably 2012 actually, not 2010. 2012, I think it was a really bad year. So there's me. So at this point here, I was verging on bankruptcy because I couldn't pay my bills and my debt, etc. And my mate was paying off his house, kept his good cushy job. I quit my cushy job, and I then got into business because I did this is probably where I hit my CAGR calculations, and then I got into business. Now, fast forward, my first 3 businesses flopped, or actually, I say flopped. So one business I had to wind up; it just didn't go well, and these just never really took off. It was like a stillbirth, not the best terminology. And then I persisted with business, and then it's been lucky number 4, 5, 6, 7, 8, 9, 10, 11, and onwards, etc. Okay, so I basically took that money to get into business, and although one of the businesses, like this one here, was Fly Siam Aviation Services. So I was trying to be a private jet broker / wedding helicopter pilot. I got my that's another thing. I wasted a whole bunch of money getting my commercial helicopters license. It was an utter waste of cash. Anyway, so yeah, there's all sorts. In fact, there's probably 4 failed businesses or didn't take off. But then eventually, I got used to it and I got the hang of business. And you don't need to do that well in business for it to be really good, because all you need to do, I mean, hell, if you get a business that's just chucking out, low turnover, like you can get a business turning over like 200 grand a year, chucking out, if you have a respectable margin, you could be making, 150 grand a year profit. And all of a sudden, in a really small one-man band type business with 0 or 1 member of staff, you could walk away clear with like 150 grand per year. Then all of a sudden, because I remember back in, it was probably like 2013 or whatever, my first little business that did well, I was like, shit, I'm earning more than the Prime Minister now. I think the Prime Minister was on like 135 grand a year back then or something, whatever. And so straight away, although my mate obviously was overtaking me straight away, in one fell swoop, I was earning more and I was saving more money than he was saving, because he wasn't saving that much, I don't think. And then fast forward to now, I could buy his house outright. Like, I mean, hell, I've got a with one of my trading accounts actually. In fact, I've got one open here. This is my gambling account. This is my crash account, as I call it. I mean, it's nice cheeky 9.5 grand profit today. I mean, this is me. I've been playing the Nasdaq. So but that is my riskier account. That's not my proper trading account. In fact, if we have a look, we've got this cool logging software where we can see all sorts of stuff in our trading logs, and so you can see the profit. So literally in the last 30 days, I've made 20 grand with just my manual trading account. My boring trading account is just boring. Yeah, it just ticks along. It doesn't really do much. But and so and the cool thing is you can look at every. If I look at the ones I've actually updated. So here, losing trade, but come on. I live in Norwich and I still don't have internet. Control F5. Come on, there should be a chart here. There we go. Yeah, it's cool. So it shows you where I entered the trade, where I exited, and then 60 candles afterwards, so I can see what happened. But anyway, wait, I'm talking about trading. This should be a property discussion. Yeah, so long story short, I got into the world of business, and because I was in an aggressive wealth accumulation phase. So the reason why I rent and I don't buy is because I don't want to park 50 grand deposit or more into a house plus 50 grand in fees. So let's say 100 grand in cash sat there parked doing nothing. I'd rather take that 100 grand and do it in, put it into something more. So that is it. So I think in a nutshell, it's been a longer video than I'd wanted. I rent because in fact, let's go back to that list. In terms of more house for your money, like this is a rented house at the moment. It's got something ridiculous like 10,000 square foot of feet. We've got acres of like land that we can play with, and a really nice house, but my rent is only like 3 grand a month. It's cheap as chips for the house I'm in. So if anything, it makes sense for the owners to sell the house. I can't imagine the yield is any good in a house like this. So for example, let's just do the maths in terms of yield. So what was it? 2,995 times 12. So we're paying 35,940 a year in rent. What's the house worth? I'm guessing. So 34. What was that answer again? Yeah, 35,940. Let's say the house is worth 2.5 million. 1, 2, 3 times 100. 1.43. So the gross yield of this house by having a tenant is 1.43%. Hell, you could just sell the house, put the money in like a shitty tracker fund and make more than that. So I just look at things from an investing point of view. Don't get me wrong, there is still a part of me that really does want to settle down. I'd love to buy this house. I'd love to. I doubt the landlord will sell to me though. So I would love to buy this house. So yeah, that's just my little 2 cents. I would just prefer to put every single penny that I have in trading and business, because it just generates a lot more. And then eventually, the goal is to end up being in a position where you can then buy your house outright mortgage free. That way you're not spunking a couple $100,000 in interest fees to the bank. So I hope that makes sense. Please don't hate on me. This is just my perspective. I could be wrong, could be right. At the end of the day, who gives a shit? I'm doing what I think is right for me and my family, and you need to do what you think is right for your family. Yeah. So anyway, Stephen, because this is literally, you're the reason I'm making this video. Hope that helped. Hope your wife gets it. And yeah, Rivian, like Bezos is playing catch up with Musk in every single, like Musk has SpaceX and Bezos says, I want to be in space, and he's copying with, you know, like, so yeah, Blue Origin's going to do nowhere near as well as SpaceX, and Rivian's going to do nowhere near as well as Tesla. I mean, the Tesla truck, the Cybertruck, in terms of specs, dicks all over the Rivian truck. Yeah, you probably don't like the looks of the Cybertruck, and some people like the Rivian, but yeah, anyway, it's just personal preferences. So yeah, I'm waiting for the Tesla Roadster with SpaceX package. I want COPV thrusters on a car. That's nuts. Right, toodles, bye.